the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
There's a tectonic shift happening with Bitcoin behind the scenes in South Africa. Entities that you might not expect are starting to embrace it, including the JSE, Eskom, and companies that are beginning to notice the long-term progression of the rand. Looking 5 or 10 years into the future, who can honestly say the rand will hold its value? The historical evidence suggests it probably won't, which is why some company executives are starting to see Bitcoin as a route out of this trap of value erosion. Tech entrepreneur Stafford Masie has been banging on the doors of corporate South Africa about the potential of using Bitcoin reserves to take zombie companies and make them interplanetary. Karel de Jager, founder of crypto company Sixpence, has done more than anyone to convince Eskom that it can get rid of its debt by using surplus power to mine Bitcoin. They both now join us to talk about these tectonic shifts. Welcome, Stafford and Karel. Let's start with you, Stafford. You recently wrote about the huge changes happening behind the scenes in South Africa with regard to Bitcoin. Tell us about that.
Yeah, I mean, it's kind of a cryptic way to speak about what's going on in crypto in South Africa, but I do have the privilege of engaging with folks in decision-making positions in quite a few of these bodies that are critical to, Bitcoin and the broader crypto world's existence in South Africa. I am pretty much a neutral in lots of regards, and in some regards I do have interests, but I do get pulled into the room to get asked questions, and Karel is often with me in those rooms where we are asked as experts, as neutrals, and we lean in. And I think the confidentiality and the trust that we have with certain of these folks goes a long way. And I also think we've been in the industry for a very long time, specifically myself. I've been in ICT, and a lot of these people that know my background know that I've been around for like 30 plus years. So we are being pulled into rooms, and we are being pulled into discussions that are pivotal. And these are very serious discussions. And I think these discussions for the industry in South Africa are what is required to make sure that we actually have a mature, regulated, accountable crypto industry in the country. Without these decision-making bodies, without these regulatory frameworks in place, we're not going to get anywhere. We're just simply not. And the problem that we have right now is it's not a problem. Karel and myself are working on a lot is education. And one of the key things that we're trying to do, which I think helped the United States, is split between crypto and Bitcoin. You almost have to do that split. And it's not a religious split. It's not trying to make Bitcoin better than anything else or make crypto better than Bitcoin. It's got nothing to do with that. It's, one is a digital commodity. David Sachs says the Immaculate Conception, that's Bitcoin. There's nothing like it. Everything else is a copy of it. And it's trying to improve on some aspect of it theoretically, right? So it's either trying to make the block sizes do X, Y, and Z to make it faster, more scalable. Whatever the solution set there may be, whether it's your Solana, Cardanos, your Ethereums, those are all good. But there's only one true digital commodity, and that's Bitcoin. And when you have a digital commodity, once you separate it out, then you can start looking at this industry through a legislative lens correctly. So that requires education. And that requires sitting down and saying, you cannot just have crypto legislation in South Africa. You got to have Bitcoin, digital commodity legislation. And then you got to deal with the other things, which are centralized, they're securities, they're not regulated today. Whereas Bitcoin is like gold. No one can really determine, gold doesn't have a CEO, it doesn't have a board. And this is digital gold. So explaining that is critical to our decision makers and our legislators in the country. And getting them over that line. Where are we with that? We're not far enough yet. So we still have regulatory frameworks that get published out or suggestive, guardrails that muddy the water. Essentially, it biases Bitcoin because Bitcoin shouldn't be dealt with in that particular way because it's a digital commodity. Whereas a security, yes, you need to deal with it in that particular way. So step one, making sure that we have clear delineation around crypto assets. So we're defining a digital commodity, and then we're defining all the other projects that have interesting scopes and interesting things that they're trying to solve for. And I think there's a play for them. But you can't regulate them like you would regulate the digital commodities. So there's a difference there. And I think in the United States, the reason they've kind of surpassed everyone in regulatory maturity and issuing out that, from David Sachs working very close with President Trump and onward. And you're taking a look at all the guys that understand Bitcoin in the SEC now, the Treasury, the Commerce departments. You've got people that understand crypto all the way around, and you can see the way it's maturing it's very clearly defined. There's Bitcoin that's going to go into a strategic Bitcoin reserve for the United States. And then there's all the other things that get legislated in a particular way, and there will be rules and guidelines for it. It doesn't stop anyone, but it gives us a clear lens. So I think that has opened up the innovation channels for crypto in the United States. Now we have proper legislation that's arising. We've got crypto, broadly speaking, that can do what it needs to do, with the SEC and the OCC in the United States giving clear guidelines associated with that. You got Bitcoin and it being defined as a digital commodity. It's in the strategic reserve. It will be the only one in the strategic reserve. That clarity allows for innovation to occur. And I think in South Africa, this is what we're attempting to do. So Carl and myself get drawn into the South African Reserve Bank. We get drawn into the IFWG. We get drawn into, the various departments that make up the IFWG. And a lot of the times it's in an advisory capacity. And we can't expect these folks to understand everything. These are folks that don't live and breathe crypto like we do. They've got all the other responsibilities, and then they've also got this portfolio. So we're very respectful. We try to lean in and educate, and they're listening. And big changes are happening. In fact, the IFWG had guidelines that they had published out for crypto. And one of the guidelines that the JSE struggled with was a clause, and I forget the clause number, and we can put it in the show notes, but essentially said that no traded company on the Johannesburg Stock Exchange could ever list a security that was backed by crypto, right? That was a guideline. That blocked a lot of efforts that I'm involved in to establish a Bitcoin treasury company on the Johannesburg Stock Exchange. But because of our relationships and because our legislators being open, and this is very exciting, they are open. But I love their positioning right now. They're open to listening to us, but they will do things that are responsible and not maverick. And I appreciate that, because we can't have another FTX happen, because I don't think it will be good for, crypto. It won't be good for South Africa. It won't be good for the economy, etc. So we can't afford for a Sam Bankman-Fried situation where we got weird rehypothecation occurring, or someone utilizing something that isn't really there, so proof of reserves are not possible. So we really need to bring our decision makers up to par. We need to help them craft, and that's what we're doing. So what happened just over the last few months, and it didn't make a lot of noise, but the IFWG issued out this guideline a couple of years ago, and in there was a clear clause that said, no publicly traded company in South Africa can ever issue out a security on the Johannesburg Stock Exchange as backed by a crypto asset. That's changed. That clause is gone. And that was Carl and myself leaning in with the relative people to make that happen, because we do need to have discussions around the JSE supporting a MicroStrategy, a Simla Scientific, a MetaPlanet, a smarter web company emerging on our stock exchange, because the opportunity for South Africa relative to that is profound. Now, if you take a look at Saab needs to orchestrate this with the IFWG. The IFWG then has to work with people like FISCA, SARS, financial intelligence, etc. And those departments engage with the edge regulators like the Johannesburg Stock Exchange. The Johannesburg Stock Exchange is not a regulator, but they're part of the regulatory framework. So if you go and lobby them and position that you want to list an entity on the Johannesburg Stock Exchange, it's going to become a Bitcoin treasury company. The first thing that they're going to show you is the IFWG guidelines. The second thing they're going to show you is, what the FISCA want. And then you're going to have to take a look at their general policies and frameworks. So that's the very edge of legislative barrier entry, right? And in my various capacities, we looking at, number one, listing an entity or taking a listed entity on the Johannesburg Stock Exchange and converting that into a Bitcoin treasury company. And it will be the first one in Africa. And that's very, very exciting, because all the benefits of a Bitcoin treasury company for the ecosystem and for enterprises in Africa and for locked fiat in Africa become possible. And then you've also got things that we need to do in terms of putting architectures in place to keep entities like that responsible. So we need to empower the IFWG participants. We need to empower the South African Reserve Bank to be able to legislate. So you can't legislate through just legislative verbiage. You need tools, right? And Carl, with the Silver Sixpence team, they've built arguably one of the best architectures for managing and overseeing from a compliance and regulation perspective crypto. So if you're going to be a custodian of crypto, their architecture is arguably one of the best pieces of architecture in the world to do so. So, engaging with the regulators and the decision makers, and not just in a philosophical way, but actually giving them the tool sets to do what they need to do is key to make this happen. So what's happening in South Africa? Yeah, the SARB is totally in conversation about this, and they're maturing rapidly. The IFWG, we've had multiple meetings with them, and we're excited about what's happening there. They're listening, and they want to see this happen. And things are changing, and things are being put into place right now. At the Johannesburg Stock Exchange, conversations have been had, lots of conversations. Those conversations are moving balls forward. Eskom, we're working with Eskom right now, and I'm not going to disclose exactly what and who, but we are working with Eskom right now on a significant Bitcoin mining deployment to do demand generation, to do grid stabilization, to do renewable energy acceleration, etc., utilizing Bitcoin mine. And again, the doors are not closed. Were they closed when we got there? Yes. But they're wide open. We're deeply engaged. And that's exciting. And that's what that tweet was all about, is that there's movement happening in almost every aspect. And unfortunately, we can't go public with a lot of it, but it's happening. And there's a lot of momentum associated with it.
All right, let's just unpack one or two of those things. So you mentioned David Sachs, who is the crypto czar for Donald Trump. By the way, born in Yeovil in Johannesburg and moved, I think, at the age of 5 over to the United States. For people who don't know him, he is a big deal over there. But so you've recently had this Genius Act, which was passed in the United States. So you have legislation governing stable coins. And you mentioned a lot of progress being happening in that sphere. Where do you see the South African deficit? You've talked about not being able to have any asset listed on the stock exchange that was backed by crypto. And yet, I think you also had a similar sort of legislative deficit in the United States. MicroStrategy developed its own Bitcoin strategy in a vacuum in the beginning. Maybe bring us up to speed on why this is such an important thing.
Well, I think stablecoin legislation is a very important thing. I think, but I think the situation with stablecoins, we need to be both. You need to look at it in a very neutral way. The skeptical way is, this is just fiat being accelerated. This is just the faster horse. And this is not the car. This is, and if you look at it really negatively, this is the United States, creating liquidity around its debt, right? Because most stable coins, if you take a look at the Genius Act, need to be backed by US Treasuries. So Tether right now, I did a presentation at BizNews not too long ago, this year, where I mentioned this, that stable coins were going to come very, very quickly. And it makes a lot of sense because if you take a look at the United States debt levels, they're so high. And if you take a look at the folks that traditionally would buy that debt, the Chinese, etc., we're actually seeing dollar debasement happening there by them just getting rid of their treasuries. I think Chinese treasury ownership is at an all-time low. Because they're getting out of the 10-year, the 5-year, etc. So the United States needs to do something about that. And it's clear that where Donald Trump's sitting right now, they're not going to be fiscally responsible. Doge didn't work out. They're not going to make the cuts that they need to make. So their decision from a monetary and an economic perspective is to go all in on growth. So they're going all in on growth. And they believe things like artificial intelligence will give them the productivity levels. And if they loosen some of the regulatory requirements over the industries, broadly speaking, this will accelerate economic activity, investment, and with AI, all of that will help them overcome, the debt burden. But essentially, what is it? The BBB, the big, beautiful bill that he issued out. Yeah, the big, beautiful bill essentially adds arguably between 4 and 8 trillion to their debt. So you're adding, they'll be sitting at about 50 trillion of debt in the next 5 years. That's insane. I mean, that number just doesn't make sense, right? So what they need to do is do everything that they can possibly do to monetize that debt and to make that debt liquid. So, and stable coins are a no-brainer, because what stable coins do, they create enormous demand for US debt. I mean, Tether is the big one. Yes, we got Circle, we got all that, but USDT is the big one, right? And when I did the presentation at Business, I think they were the 8th largest owner of United States treasuries in the world. And I think if I read it this week, I think they're close to being the 5th largest, which means people are buying these tokens, and these tokens are backed by US dollars, but they're actually backed by debt, right? So what they do is they go and buy US treasuries, and that's how they back up their token. And that gives you stability. But if you take a look at the yield rates right now, you look at the debt, I mean, there is a lot of volatility there in respect to that. But this is the way they monetize their debt. This is the way they create liquidity around their debt, and they've got to do it. So that's the driver, in my opinion, of the Genius Act in the United States. It's they're in trouble. They've got to kill this by death by 1,000 wounds. You've got the big, beautiful bill. You've got regulatory lackadaisical, like just lifting of all the regulatory requirements in most of the industries. And then you've got, the Stablecoin Act, the Genius Act. And the Genius Act essentially allows businesses to issue stable coins and list on the exchanges in the United States, and they'll be regulated by the SEC. But I think it goes even broader than that. I mean, if you take a look at what the United States has done from a regulatory perspective with crypto, I mean, the OCC, which sits underneath the SEC, has issued out multiple statements allowing, banks to custody crypto. So yes, the stable coins are now the noise, but just a couple of weeks ago, the OCC came out saying banks are completely allowed to go out and custody crypto, which is insane. So the shackles are being opened up, and these entities can now do this. And at the end of the day, if you take a look at the role of banks relative to US treasuries and the Federal Reserve, you take a look at the role of stable coins relative to this, you can come up with a big conspiratorial position on this, right? That they're doing it merely to back up their debt as one of the levers in their overall strategy. And I don't think they have a choice. So, but I do believe stable coins have enormous utility. I mean, the people that buy stable coins, folks not like you and I, they're not like the folks in the United States. So stablecoins are kind of like, they're interesting because they give you like a frictionless dollar, which is amazing. And I think folks like Visa and MasterCard have to kind of look at this carefully. But I do think they can open up with their distribution network. They can actually accelerate stablecoins, which they're going to do. I mean, Visa's come out very clearly. MasterCard has positioned themselves. But we're also going to take a look at some of the Bitcoin Lightning stuff. Right? That's very interesting. That's moving really fast too. But the people that buy USDT are folks in Venezuela, folks in Turkey, folks in Egypt, folks in places, South Africa. Yeah. And the reason is it's not just movement of money, it's also storing of value. Not necessarily for years at a time, but at least knowing that you can hold on to what you've earned, your time and your energy is stored somewhere that's relatively stable for at least the next year. And I think those are the folks that are buying USDT right now in a crazy way. And I think the demand for that is not going to slow down. I think the demand for that will just accelerate on a global basis. And that will continue. But yeah, so stablecoins will, and we haven't spoken about stablecoins a lot in South Africa. I know that some of the legislators are looking at it, but Carl and myself haven't really been pulled into rooms to discuss that at the moment. I think we are still at least 6 to 9 months behind that conversation. Relative to stablecoins. Right. I don't know if you want to lean in there, Carl.
Yeah, so let me tell you something interesting about stablecoins, right? So we have a data engine. It's called Ledger Core at 6 pence, and we can run multiple analytics on it and so on. And we've just run and compiled a report for one of the regulators in South Africa about this exact issue, about how much money is actually flowing across South African borders and who is actually transacting with that money. So who are the entities that's actually doing those transactions? And we found that more than half of the volume, more than half of all crypto volume in South Africa is stablecoins. Yep. Across our borders. And you have to ask yourself, so why is that? Like, why would someone prefer to use a stablecoin and not Bitcoin? And there's many reasons for that. Well, one is obviously payment. So we do seeing a lot of actual utility. That's the utility layer for me in crypto is stablecoins, is seeing payments. We're also seeing this people immigrating assets, for example. So it's a very easy way to get your assets in or out of the country. I can't actually express myself legally whether that is okay or not, but that's the reality. That is what's being done, and the volumes we're talking about, right? The total crypto volume, we're talking more than 300 billion rands a year across our borders, of which at least half of that is stablecoins. It is significant. It is systemic, and there is like an absolute explosion of demand in that. So that is actually very interesting. And then lastly, our data compares very well to the data of Chainalysis and the others that's reputable companies that's also done these kind of studies. Lastly, something very interesting is that if you look at traditional currency, how traditional currencies are actually distributed and used across society, you'd find that there's a healthy distribution. Maybe around 70% or so is US dollar. And then the rest, the other 30% is made up of euro, yen, renminbi, and so on. But in stablecoins, it's 99.9% is US dollar, and only 0.1% is the others. So it actually provides something very interesting. I think it is, if you give users a choice as to what currency they want to hold, there is just one choice, and that is US dollar. No one wants anything else, right? So, some interesting insights.
Yeah, the liquidity pool. I mean, people always go, well, the US dollar is being debased, it's going down. No, it's not. No, it's not. If you take stablecoins into account, it's still the biggest pool of liquidity in the entire world is the US dollar. If you want to settle a multi-billion, hundreds of $billion trade, there is no other asset in the world that you can use as frictionless, as liquid as the US dollar. And stablecoins are just going to accelerate that. And it's clear that this is them. And I said it when I said it in the business news keynote that I did, that this is the way that they ensure dollar dominance. And we got to be real careful in South Africa because these things are moving at such a pace. And the stats that Carl just shared there, when we did the study with Silver Sixpence, so I'm involved with Silver Sixpence, we did the study and the studies came back and I looked at it. My God, I mean, we were blown away. The volumes are just profound, right? And the volumes exist because, I mean, I know a business that couldn't pay someone in Pakistan. Couldn't pay, right? Tried to do the BOP form via FNB. Sat there, tried to understand which BOP code was the relevant BOP code, right? But made the payment. Finally cleared through South Africa. The guy in Pakistan waited. 2 weeks later, still doesn't have the money. Then the money appears in a regional bank in Pakistan somewhere. And he's got to drive 100 and something Ks to go get it there because that bank won't charge. Fiat is so broken. It's not that these things are like amazing. It's just fiat is just so shitty that people have no choice. And so people don't want to do, people go like, so this is what it's going to be used for, like drugs. And so, no, people want to do honest business in a frictionless way. They just want to do work. And I think coming out the gates and saying these things exist just because people are doing illicit things with them is you don't know the data. You're talking complete cuck because that's not what people are doing. The trades that we're seeing are not legitimate trades. The majority of those trades are just simply a business trying to pay, example, someone in Pakistan in a frictionless way. And so instead of doing the BOP form and all that rubbish and paying so much fees, you know what happens? You buy a stablecoin. You settle the guy in real time and he can cash out on his end, boom, done. I mean, you can literally do a payment. And that's the beauty of crypto, right? That's the beauty of the blockchain. That's the beauty of what these stablecoins are doing. And I think we need to embrace that. Now, what we need to do is understand that this is happening irrespective. Our legislators are not aware of the depth, breadth, and width of this. We know that whatever comes out of the mouths and the media from SARS through to whoever, they don't actually have the intricate tools to monitor and manage this industry today. They don't. So we need to enable them. And I think this enablement will accelerate the innovation. This enablement will allow them to think clearly about this and not implement potential frameworks and guardrails that will stop innovation. So Carl and I are very passionate about this. We are engaging with every one of these names that we're dropping here on a one-on-one basis together. We're in the room with billionaires, raising capital for a lot of this stuff to make it happen, because we do think it could create a renaissance. I mean, I grew up in El Dorado Park. What's profound about Bitcoin for me is that Madumson Extension 4 that owns a Shebeen over there. When I went there a few years ago to explain Bitcoin to her, she got it in 10 minutes. She understood it in 10 minutes. I was on the board of Discovery Bank for almost 4 years, and I tried to get Adrian Gore to get Bitcoin. And Adrian still is not totally there. I don't want to give away his crypto position, but he's still not there. I mean, this asset class is incredible because it's actually empowering the edges of the network versus kind of the nodes inside or the centralized entities inside the network, it's empowering. It's beautiful to see, and it's just going to accelerate. So yeah, we're excited about it. But what we're trying to do, and that was what that tweet was all about, is we got to enable the SOB. We've got to enable IFWG, and that's education, that's provisioning of tool sets, helping them and getting this stuff over the line, and it's happening. I mean, we've got Bitcoin Ikasi and Herman and all the guys doing it on the ground over there, the ground level work happening. But there's big money, big deals occurring, all the way from Bitcoin mining through to, architectures being put in place to accelerate all of this. So I'm excited. And I think it's not press releases. It's not making it into the media because it's a little too early, but it doesn't mean the momentum's not there and the cadence is not there. But our legislators are not standing in the way of this stuff. They're listening, they're engaging deeply, and we're excited about it.
All right. We are running out of time, but I just have one quick question for both of you, if you can give me your responses to this. I mean, we are starting to see a lot of innovation happening around the crypto space. Just in the last week, we've seen Luno and BitGet, which is a new exchange in South Africa, offering fractionalized, tokenized stocks. And you've got Valor introducing some very interesting products, the likes of which you're not traditionally not been available in South Africa, where you can earn 8 to 10% on a US dollar effectively investment in South Africa. All of this you can purchase with your rands in South Africa, never before seen. So the rate of innovation that is happening is accelerating at a rate I think is surprising. Maybe it's taken a while to get here. But I think the other thing that people are probably going to start paying attention to is this Bitcoin reserving, putting your assets. A lot of people are doing this in Africa, where they take their local currency and they'll put it into a US dollar stable coin, protecting them against inflation, local currency debasement. Few companies are doing that in South Africa, but if you see what's happened to MicroStrategy and the number of companies that are doing this in the US, now also with Ethereum strategies, why are they doing this? You've talked about fiat being broken, and that, I think, answers the question why they're doing this. So my question to you both is this going to be the next wave of corporate adoption here in South Africa?
Look, let's take a step back, right? Who's buying MicroStrategy's instruments today, right? So they started off with MSTR, and then they started kind of financial instrumentizing their levers, right? So there was MSTR where you could buy equity, and that equity was a reflection of the Bitcoin. So they would take the money, the inflows from the equity, and you, as a shareholder, your money would go into the Bitcoin treasury, right? Then they issued out convertible bonds, and they opened up the bond market. Now they've opened up things like Strike, Strife, Stretch, Stride. And those are, look at it this way, those are channels, platforms, and product sets that enable capital allocators that traditionally would never have the ability to be exposed to Bitcoin to finally be exposed to Bitcoin. So pension funds, not your keys, not your coin, doesn't work for a pension fund. Okay, the cypherpunk stuff doesn't work for a hedge fund manager or a bond trader, but they want exposure to the asset. And Bitcoin, that's why Michael Saylor portrays it. It's like a nuclear-powered engine, right? It's like, he calls it fire. He says, like, normies run from the fire, scared of the fire. But he says, I love that analogy. He goes, but like Henry Ford took the fire, he put it in the car, and he gave us the combustion engine, right? He says, Elon Musk takes the fire and he puts it into rockets and he makes us interplanetary species. So you can either run away from this thing called Bitcoin that's apparently so volatile and crazy and the fire is mad, or you can do what Michael Saylor did. He took a zombie company He took his business intelligence company that couldn't compete anymore, with Microsoft and those guys, but he had customers, he had a balance sheet. What do? You can either just go sell it off to a bigger company, or you can, retire and go off into the horizon, or you can take a nuclear reactor and shove it into the core of your business and watch what happens, right? You become an interplanetary company. And what happens with that is essentially you have multiple orbits. You create I'll use these analogies. He creates a white dwarf. Right? And when a white dwarf, like he says, moves past, it sucks all the other planets in. And that's exactly what MicroStrategy is doing. It's sucking in fiat capital into a Bitcoin vortex, and it's consuming fiat. And the reason that is happening is not because of Bitcoin, it's because of fiat. Right? So if you take a look at the M2 money supply, you take a look at inflation rates, you take a look at indebted nations, you take a look at fiat. Forget Bitcoin for a second. Just look at fiat. Fiat's broken. Like it's so broken, and it's such a lie, and it's so messed up, right? So like, where do you put your capital today? So the same challenge that Madums has in Eldorado Park around debasement, right? When she looks at her money on her table and she sees, like 5 years ago, her money can only buy what she bought 5 years, like half that money can buy. It's crazy, the debasement, right? So she understands debasement. Guess what? Corporates understand the same thing. They suffer from the exact same thing. Where are you going to put your dry powder, right? Where do you put your capital on the liquidity on your balance sheet? Right? There's so much geopolitical instability right now. So look at South African corporations. What is Trump going to do? The Jackson bill that's on the Senate floor right now. What does that mean? What is Cyril Ramaphosa doing with Trump at the moment? Like, how's that going to play itself out? Are we going to be hit with 30% tariffs or not? Or will it be 50% tariffs? Will the ICJ criminal court case, the Israel thing, actually make the United States turn on us even more? Those things are what corporates sit with. Just like you and I sit with, what's the Reserve Bank going to do with inflation and interest rates? And, what's going to happen with property prices in Johannesburg, because everyone's going to Cape Town and my property price has now gone on average down by 30%. We all sit in principle with the same issue, because the currency that we have, the fiat that we're sitting on, is constantly getting weaker. It's like, no, your groceries are not getting more expensive. Your money is getting shittier, right? That's the problem. And that's the underlying aspect to all of this. This is the man in the street and why Bitcoin is so popular. If Bitcoin was dumb money, just fake, and like all these other stupid, if you go take a look at it, the reason people are fleeing into it is because money is broken. Not Bitcoin, money is broken. Corporations are fleeing into it because where do you, as a capital allocator, the best asset class in the world today, that only goes up, it doesn't go down. Its ARR is between 20 and 29 and 30%. So if you want an asset that's growing on average, right, 29 to 30% per annum for the last 16 years, and it's just going to keep doing that because it's so correlated to so many things like the M2 money supply, you're going to want to allocate capital to this thing. So in the United States, MicroStrategy is doing this, and every time they issue out a new instrument, you can see in the global market of things that we have, equities, bonds, art, cash, you name it, right? Those things are they're slowly flowing into Bitcoin. And it makes sense. Now, capital allocators, coming back to the point, that could never touch the asset class because of the nature of it. Not your keys, not your coin, multi-sig wallets. It's just too complicated for them. But if they can buy a security that has exposure to the asset, they'll do that. And that's what we've seen happen with MicroStrategy, Simla Scientific, Metaplanet in Japan. It's so obvious. Take a look at Metaplanet in Japan. Why are they the best performing stock in the last 2 years in the world? Why? Right? Because the yen's so bloody broken, right? It's not because Bitcoin's amazing. The yen's just broken. And guess what? You know how broken the yen is? That a company with a non-functioning hotel can list on their stock exchange and become one of the best performing stocks in the whole world. That's not a reflection of the madness of crypto or Bitcoin. That's a reflection of how broken fiat is, right? Then you take a look at the Smarter Web company in the UK. Now, they launched. Now, if you take a look at those companies I've just mentioned, those 4 stocks are the best performing stocks in the entire world in the last 2 years. And it's not going to stop. because they're going to keep issuing out new instruments that give capital allocators incremental exposure to the asset class. And you're going to keep seeing fiat capital flowing in. You're going to see pension funds. You're going to see bond markets. You're going to see more equities coming into it. It's going to happen. People are going to move away from gold. They're going to flee into this asset class, especially folks that don't understand the technological aspect of it, but want exposure to it. So in South Africa, if you Discovery, if you are Naspers, if you are whatever traded company may be on the Johannesburg Stock Exchange, and you take a look at the political situation in the country right now, you take a look at, the Reserve Bank, you take a look at our economic situation, where do you deploy your capital? Where do you put your liquidity right now? And the estimate that we have is, I think in South Africa, there's a broad-based estimate. I was talking to an analyst. We have about 1.7 trillion rand of undeployed capital in banks in South Africa. 1.7 trillion. That's just sitting there, and companies won't touch it because they're not sure where to deploy it, what to do with it. That 1.7 trillion is due to be unlocked. And if we go up into Africa, I think the Johannesburg Stock Exchange is probably the only stock exchange with the necessary liquidity to house a Bitcoin strategy company. You can't do it on the Namibia Stock Exchange. You can't do it on the Ghanaian Stock Exchange. You can't do it on the Nigerian Stock Exchange. You can't do it on those. There's not enough liquidity there relative to that. And there's not enough international connectivity on secondary trading markets in the world. So what we will see, in my opinion, in the short term, you will see a company on the JSE that will morph into a Bitcoin treasury company, and it will create this white dwarf Bitcoin black hole that will allow pension funds across the continent, enterprises across the continent, exposure to the asset class, and it will suck in all that fear. And
I think
you'll
people
see
who are not familiar, MicroStrategy adopted their Bitcoin strategy, I think it was 4 or 5 years ago. Their stock price has gone up. As you said, from a zombie company, it's gone up 12 times. I think the one that hasn't really worked that well is GameStop, but they kind of went into it half-heartedly. They got cash back for other things. But those that have gone all in, boots and all, it just absolutely transformed the company and the stock price.
Okay, so right now I'm involved in an entity that is attempting to do this. But it takes the JSEs to get their head wrapped around it. It gets, the FISCA has to get their head wrapped around it. The SARB has to get its head wrapped around it. It's because you got to make sure that the regulators feel comfortable with this. It's new, right? And the first thing you got to do, guess what? Coming back to how we started this, you got to make sure that you split Bitcoin away from everything else. Because if you don't, you can never do a Bitcoin strategy company, right? And because then you're getting into crypto la land, then you can't do a Cardano strategy, the treasury company. You can't do it with that. You can only do it with Bitcoin today. Yes, you're seeing some ETH stuff happening overseas, but you got to take those regulatory steps and take them along. And we've been doing it now the entity that's attempting to do this has been doing this now for a year and a half. Education, enablement, going in with, showing the regulators that we can be held responsible, that here is an auditing company with the capability to audit us, to do proof of reserves, to ensure rehypothecation is not possible. Those things are things that we got to put on the table to enable all this. So yeah, a lot of work's happening, man. It's happening. Right. And I'm excited. And I think if there is a Bitcoin treasury company, its mandate should be that we need one in Africa, because let's be honest, Bitcoin was made for us. It wasn't made for anyone else. I mean, if you take a look, when I speak to the guys in the USA, when I'm on calls with them, and I mean, I've met guys like David Bailey from UXTO and Nakamoto, and I've met Tyler and those guys. I mean, just a few months ago, and I told them, I said, you guys, when Bitcoin goes up, Bitcoin goes down, you speculate, it's uncomfortable, you don't like it, right? I told them, when payments don't work in Africa, people die. People die. This is not for us a coin go up, coin go down story, right? This is escaping. This is life or death. The reason
it's existential.
It's existential. And that's why stable coins are so popular. That's why these asset classes are so popular. Why? Because people can't do what they need to do business. People can't live under the current fiat regime. So Bitcoin was made for Africa, and we need to have a Bitcoin treasury company on the Johannesburg Stock Exchange to allow enterprises through to the individual in the street exposure to this asset and de-risk them. and allow for freedom. So I will try my very level best, and I will continue to lean against the wheel to make sure that this happens. And folks like Carl are at my side. Smarter people than us are also at our side, attempting to do this. And I think it's exciting because I think it can have enormous economic. We need this. As South Africa, we need this. We need this innovation, and we need the capital inflows, the foreign direct investment that could come from some of these things. Incredible. And if you take a look at just 2 or 3 initiatives that Carl and I are involved in, should they be successful, it's an excess of about $350 million of foreign direct investment into South Africa that directly related to that. And that's exciting. So, if we can make this happen, it could inject the JSE, it could accelerate things on the JSE, it could really do amazing things. So we're excited about it. We hope it's going to happen. We're leaning against it. And we just want to tell all the Bitcoiners and all the crypto guys out there listening to this that it's happening. Don't lose hope. We're trying our best, and just keep orange pulling, doing what you do every day.
All right. Carl, final word from you on the Bitcoin strategy. I think the message here that I'm getting from Stafford is to companies like Discovery and Naspers, get with the Bitcoin program. They might be sort of not listening at the moment, but I think eventually the message is just going to crack through, right?
I think Carl's got connectivity issues. Let me respond. I think companies like what you just described, like Naspers and Discovery, they will probably be the last guys to come along, because those are successful companies, right? They've got broad-based shareholders. They don't really have the pain right now to come along, but it's inevitable. It will happen, right? But it's very interesting. Coming back to that point of this is what makes this asset class so incredible. It's not dissimilar from artificial intelligence, right? AI right now, the action is not inside the enterprise. It's actually outside the firewall, right? It's you and I using AI. It's individuals at home doing things with AI. I mean, the AI has been adopted outside of the enterprise ICT budget. I mean, it's you and I paying the $20 a month to gain access to chat and Claude and all these other things, and we're doing it's incredible that the tool sets around AI are being adopted faster on the outside, on the edges of the network versus inside the network. Bitcoin is not dissimilar, right? The action is actually not institutional first. It was you and I. I mean, for years and years and years, I'd argue up until the end of 2023, no publicly traded company could really touch it. No enterprise could really buy it. But we could, which is quite profound, right? That we have the ability to go and buy R1 million of Bitcoin, whereas like Naspers can't get their head wrapped around it, and they don't have the governance, and their board would have to do so much, and who would hold the keys, and how would they actually buy it? Like Naspers and Discovery today couldn't buy Bitcoin. Adrian Gore holding crypto keys on behalf of Discovery, is Puti Manyala going to own all the keys for Naspers? It doesn't work, right? I mean, how do you fit it into a governance framework? How does it fit into the King governance framework? How does it? It just doesn't, right? So boards are not going to get their heads wrapped around it. And that's why I do believe when a treasury company launches in South Africa on the Johannesburg Stock Exchange, I do think that will create the gateways for the companies that manage the capital on behalf of those organizations to allocate at least 1 to 2 to 3% to this asset class. And that's you're gonna start seeing that happen, and it's already happening globally, and it will continue to happen. It's inevitable.
All right, we're going to leave it there. What a fascinating discussion. Thank you very much, Stafford Masie, for joining us. Carl, I thank you also for your contribution here. And this is a debate, I think, that's got to actually enter into the boardrooms of corporate South Africa, and it's got to enter pretty quickly.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.